Greetings, members one and all of the Salivation Nation. Well, gold has risen above $1,200 as buyers are cashing in on the dips. People are taking notice.
Gold is in demand.
And by in demand, I mean that at a very minute scale, because it really hasn't bumped up a whole lot over the past couple of days, but it is kind of interesting to see how things are, and really, even silver, too, is coming into play here. I think people are starting to take notice, and understanding the true value of these precious metals, and that it's time to cash in on the dips, for sure. This is from CNBC. Gold rose on Thursday as recent weakness tempted some price-sensitive buyers back into the market, and a retreat on stock markets sparked home safe haven demand. Spot gold was up 0.5% at $1,203 an ounce, $1,203.01 an ounce, having traded in a narrow $34 range for more than a month. U.S. gold futures were 0.3% higher at $1,206.80 an ounce. Gold has fallen more than 12% since hitting a peak in April under pressure from a stronger dollar that has since been boosted by a vibrant U.S. economy, raising interest rates and fears of a global trade war. The move shows signs of gold strength, says a Commerce Bank analyst Carson Fritz. The metal has fallen too much to a level that cannot be justified by fundamentals, which means that we may have actually finally have seen the bottom. And I was fortunate enough to be able to make a purchase of gold at, believe it or not, the right time. Usually I don't do that. Usually when I make a purchase, it goes down further, or it's when it has gone up. But the appetite for gold at lower prices helped gold shrug off a surge in U.S. Treasury yields to the highest since mid-2011, pulling global bond yields higher and supporting the dollar near 6-week highs. Equities sagged in response. Kitco Metals senior analyst Jim Wyckoff said some investors had turned to gold as a safe haven over inflation concerns. Gold is often used as a hedge against inflation risk, but he said Thursday's gains were mainly on technical buying, means it's probably some paper ETF trading. There is some balance when central banks buying gold quietly, individual investors and hedge funds trying to sell gold, Hussein Syed, chief market strategist at FXTM. Gold is steady around $1,200 levels, which shows that the market is trying to put a floor on price. Let's stop right now and take a look at the prices of gold right now. Well, it's barely above, but it is just above $1,200. And silver's down 4 cents, but it's kind of holding pretty steady too. Platinum and palladium holding relatively steady as well. Higher interest rates tend to boost the dollar and push bond yields up, putting pressure on gold prices and increasing the opportunity cost of holding non-yielding bullion. Non-yielding because bullion does not pay dividends. It doesn't make you any money. It's not an investment unless you play it or trade the ratio, as I've mentioned in a prior video from Makaru Ushanka's book, Trade the Ratio. Looking ahead, investors are awaiting U.S. non-farm payrolls numbers due on Friday, with Reuters survey showing economists on average expect a rise of 185,000 in September after jumping 201,000 in August. So that's good news. Holding on SBDR Gold Trust, the world's largest gold-backed exchange-traded fund, dropped 0.8% on Wednesday, having declined more than 4.5 million ounces since late April. Among other metals, spot silver is up 0.8 cents at $14.70, and since came back a little bit. Palladium was up 0.1% higher at $1,056.72, while platinum rose 0.5% to $825.80. So there you have it. And one thing to note here with this is that, this is another example of several where the gold and silver prices could be run diametrically opposed to the dollar index. In other words, the strength of the dollar may remain steady or at one level, and gold could still go up. And I think this is a strong case in the situation where there's rising demand in a product, in any kind of commodity, but especially here with gold, where gold could go up and the dollar index could go up at the same time. So that's quite fascinating, and there's other areas where it could go up. Psychology, the political environment, the geopolitical environment, domestic and foreign politics come into play, and also the other psychological factors can certainly come into play. A black swan event that could leave the dollar index where it is or even rise up. Who knows? Those are probably very rare situations, but nonetheless, it's fascinating to see how things play out and where gold and silver is. Again, looking at these markets here is fascinating. We see, by and large, with gold and silver being where they are, and I believe that we are establishing a floor in both of these metals right now. As the early fall sets in, the summer's over, the summer slump is over, and we may see gold and silver trade sideways for a while until the end of the year, which means that my prediction is going to be less likely to come true as the fall months come into play, especially if they slump, and as the end of the year draws near. But we shall see. A more realistic scenario may be $12.50 for gold and maybe $15 for silver, or $15.50, maybe getting close to $16, which may be more realistic predictions, with a slight uptick, as opposed to my predictions, which would have made much more sense months ago, are starting to make much less sense now. But nonetheless, it's fascinating to see. As we know, we hold these precious metals to be self-evident, and that is that they provide the ultimate insurance, the ultimate protection, the ultimate hedge against economic instability. And as long as the economy is stable, one way or the other, they're going to probably remain low. And that's another thing to be said too. If we have an economic slump, as long as it's predictable and stable, these precious metals may stay down once we get over the shock of an economic crisis or a gradual decline in the economy. People adapt to the norm, whatever that norm is. And so, with that being said, it's difficult, really, because there's so much psychology involved with these precious metals to see where things are going to go. But I do like the fact that there is demand for these metals, whether it be in the exchange traded, although really it'd be much better if people would accumulate the actual physical. You and I, the viewers of this channel, we understand if you don't hold it, you don't own it. I'd be very curious to see the people who actually, hold the paper gold or ETFs that want to actually trade it out, that want to trade out their ETFs for gold itself. Is it even possible? What hoops do you have to go through in order to do that? And same thing with the, with the JP Morgan's SLVR. That SPDR Gold Trust, and what would it take to actually get the physical from the electronic? I'd be very curious. That would take quite a bit of research, or if any of the viewers here, I'd be curious to see if any of you hold ETFs in gold or silver, and maybe if you do hold them, let me know what kind of information you have on the inside on how you can cash those out for the physical. I would assume you could do it. It'd be quite fascinating to see. So anyways, post your thoughts below on these matters. I think it's fascinating. Demand is up. We may be seeing a trend or a change in gold and silver prices from here on out, or at the very least, the development of a floor. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, comment, and subscribe.